Thank you, ladies and gentlemen, for joining us. Please do settle down. And with this, I request you all to kindly join me now and welcome our panelists on the panel discussion of credit card on UPI emerging opportunities for banks and fintechs. We have amongst us Mr. Agrawal, Vice President and Head of Payments at PhonePe. Let's welcome him with a round of applause. He is our moderator for this session. Thank you very much for joining us, sir. And we'd like to welcome our esteemed panelists. Yes, with a big round of applause. We have amongst us Mr. Rajat Mangla, General Atlantic, the Vice President at General Atlantic. Let's have a big round of applause for him. Thank you for joining us, sir. We'd like to welcome Mr. Sandeep Indurkar, CEO at Resilient Payments Private Limited, a BharatPe group company. Thank you very much for joining us, sir. Let's have a round of applause, ladies and gentlemen. And let's welcome Mr. Sanjeev Moghe, President and Head, Cards and Payments at Axis Bank. Thank you so very much, sir, for joining us. We're looking forward to fulfilling discussions on credit card and UPI emerging opportunities for banks and fintechs. And now that we have our esteemed panelists up on stage, I request you to kindly take your seats, and every single one of us is looking forward to this discussion. So all over to our moderator, Mr. Agrawal, sir. Please do take this session forward.
Thank you so much for the introduction. Good afternoon, everyone, and hope you're all energized by the amazing session by Mr. Modi. To start in a quick earnest, I don't want to take off too much time. And thank you all for joining the session. Really appreciate this. Credit cards on UPI was launched about 2 years back. All right, so credit cards were launched about 2 years back on UPI. Credit cards have existed in India as a digital payment mechanism for decades. They came a lot before UPI, and outside of UPI, credit cards is the only digital payment method which has grown very, very significantly over the last 5-6 years. My question to all my panelists, co-panelists, is we've seen significant scale in UPI. We have 400 million users. We have about 15 billion transactions on a monthly basis. We process a very, very high percentage of the country's GDP on UPI. Credit cards probably have a penetration of about 4 to 5% of the country's population, about 50 million odd users, whereas UPI has over 400 million users. The question is a quick take on what do you think are the opportunities as we move ahead, and then we'll delve into deeper questions.
From a fintech perspective, I like to highlight, like from BharatPe, it is an opportunity to acquire more merchant, because to that extent where the merchant wanted to accept credit, and it gives us a competitive differentiation. If the competition is not offering credit on credit service to the merchant, we can offer that credit service to the customer. And it is also giving more transactions to the merchant. And to that extent, it is helping us drive more transactions, more revenue. And to that extent, we have more data points and we can monetize by lending to the merchant. From opportunity point of view, it is very good. And as you are saying, we have 700 million smartphones and 350 million users in UPI with delegate payment, UPI circle, and this credit getting enhanced, right? Definitely it will add to bridge that gap from 350 to that 700 million.
Yeah, I hope this is audible. Yeah, so Deep, the way I would like to look at it, I'll bring in the issuing I'll bring in the issuing perspective. Currently in India, you have monthly card spends, which is roughly 1.6 lakh crore. 25 to 30,000 crore out of this is commercial, which means retail, as all of us spend on a credit card, that's roughly 1.3 lakh crore a month. UPI spends overall, last month July data has come out, it's 20 lakh crore. It's crossed 20 lakh crore after quite a few months of 18, 19 lakh crore. Out of which the P2M component is roughly 5 to 6 lakh. If I remember right, I think it's around 6 lakh crore. The 1.3 lakh is growing at roughly 20%. The 6 lakh is growing at roughly, I think, 80% or thereabouts. So by the time, let's say we are talking next year GFF, this 6 would have likely become around 10, 11 lakh crore a month. The 1.3 would have inched along at 20%, by the way, 20% should not be called inched along, but will be around 1.6 lakh crore. Now the part becomes interesting. This is if UPI on credit card did not exist. As UPI on credit card exists, and in this room, or anywhere outside this room as well, out of the 40 odd crore customers that you're talking about, let's say out of them, 3 crore have credit card. So let's put a number, logically all 5 should have. If you're debiting your bank account, and you have an option of debiting a credit card, interest-free, rewards, and of course you have a credit line. Why would you not do it? You will not do it just because you don't have a RuPay credit card. Plain and simple. I think that's the part that we need to solve. But if you solve this, immediately the spend pool goes up from this 20% growth on 1.3 to conceptually all of the 6 lakh crore, okay, not all, because all of them will not be carded. Let's say the carded customer spend out of this 6 lakh crore is 3 lakh crore. All of that is available tomorrow. All merchants in India, not your 7-8 million, roughly, I don't know the number, but maybe some 5 crore, 10 crore, all kind of numbers are around. In terms of how many merchants accept QR now, unique merchants I'm talking about, that pool becomes available. Second perspective, what we have seen out of whatever we have carded over the last year or so for us since we went live, monthly UPI on credit card spends, by the way, have crossed 8,000 crore. So if UPI on credit card were to be a bank by itself, they will be, I think, the 5th or 6th largest bank today in terms of issuing spends. They are not a bank, it's across all of us, etc. Next point is, how much do I spend? I spend 100 rupees on my card. People we have given a card to, you see, their plastic spend has come down from 100 to roughly 80. On the other hand, we are seeing another 70 to 80 rupees of spend on UPI on credit card. So at a customer level, 100 has moved to 150, 160. Split into 80 on plastic, split into 80, roughly 70 to 80 on UPI on credit card. So piece it all together now. What I'm seeing at individual customer level, and I am saying the industry, individual customer level, look at the spend pool available, which is 6 lakh crore, growing at 80%. Third part, we have already given out cards, underwritten customers, unique count must be 4 to 5 crore, overall number of credit cards in India is 10.5 crore. This is the opportunity we are sitting on. That's the opportunity we are talking about.
Yeah. Perfect, thanks.
Thank you, Sandeep. I think Sandeep mentioned a lot about what's happening in the growth on merchants. Sanjeev mentioned about the consumer side. I think from an investor point of view, the key message is that we are very bullish on credit card on UPI. And from whatever is benefiting from merchant side, from consumer side, I'll just add a few extra perspective there. One, we see a lot of, it's a big growth area for TPAPs, for fintechs, because there has been a problem of monetization in the past on UPI, which I think to a large extent gets solved. A monetization and eventually a path to profitability becomes a big area and a growth driver with the help of RuPay on credit card. Second, from the consumer side, like Sanjeev mentioned, interest-free credit period and rewards. And what we are seeing when we are doing our work on the consumer side, it has people are taking it in significant numbers. And we saw in the recent SBI cards report that there is a 50% Q-on-Q growth in the UPI spends on RuPay cards. And the majority of that growth is coming from tier 2 country, tier 2 parts of the country. So that's a big growth area from an investor point of view where we are seeing. And I think the third most important side of it is the regulatory and the government side. The government believes that the growth of RuPay credit card is essentially strengthening the domestic ecosystem, domestic payment ecosystem of the country and reducing the reliance on non-Indian payments ecosystem. So in a way, it's benefiting the entire ecosystem, and that's what makes us very strongly bullish on this kind of payment system.
Thank you, Rajat. Sanjeev, for you, there's a very strong hypothesis that the increased distribution coverage, both on the consumer side as well as on the merchant side, gives the opportunity to distribute these RuPay cards to a lot more consumers, right? We have, like we were speaking, and the numbers vary, 4 million, 5 million, 40 million, 50 million users who have cards today in the country. Can that go to 100 million soon maybe, with the access to this additional data points through UPI?
Okay, so 2 points over here. One is the note of caution. See, finally, credit card is it's unsecured credit out there. So it's not like, conceptually, yes, UPI has roughly, let's say, 40 crore individual users every month, etc. And credit card, while the number is 10 crore, individuals must be 4 or 5 crore. There is a walk from 4 crore to 36 crore up to 40 crore, etc. You are finally giving out unsecured credit, you cannot give it to everybody. You can open everybody's bank account, yes. That we have done as a country. Modi ji spoke about it earlier in the day. But you can't have an objective saying, I'll give out a card to everybody, because that is not the way it works. So that's the note of caution. But let's now talk about the note of opportunity. UPI data is underwritable, yes. In Axis, we've been doing it 3 years plus. We are a 3rd generation model of underwriting UPI now. And maybe some other bank must be 4th generation. So without getting into that part, etc. The fact is, UPI data is underwritable. How much he is spending, how many times, where is he spending, so on and so forth. And why is that underwritable? Because it is no different from what we were doing earlier on just the bank account. Salary coming in, salary going out, how many transactions on debit card, how many transactions on IMPS, NEFT. Finally, UPI is debit to your bank account. Obviously, we can't read the balance. What we can't do is we can't read the balance, right? Just leave that out. Everything else over there, and if any of you over here is from the analyst field, etc., data analytics, etc., it's a dream to underwrite that. We have been doing it, and obviously I'm saying this will evolve. This will evolve for each of us as issuers, but does it mean I will underwrite incrementally just for UPI on credit card? No. Will we underwrite incrementally based on UPI data? Yes. Does it allow us, therefore, to accelerate the pace of growth of card issuance? Conceptually, the answer is yes. Obviously, then there is a reality saying this quarter risk is looking high, next 6 months risk may be high, next year may be better, and so on and so forth, etc., which are more what I would call the vagaries of business. But your question was at conceptual level. Conceptual level, 3-4 things. Just to summarize again, UPI data underwritable. Will the industry, leave issuers, etc., underwrite incrementally just for UPI on credit card? I would think at least our answer is no. Today, the answer can change tomorrow, but today it is no. 3, it allows us to underwrite basis what we are seeing just on UPI, standalone, and seen in conjunction with what else we are seeing. Conceptually, it could be what Flipkart is seeing, along with UPI. It could be what I am seeing on my bank account plus UPI. That data is very rich, and that allows us to accelerate the pace of growth. How much we will see over next 3 years, 4 years.
Thank you. Sandeep, do you see any specific opportunity on the merchant side now opening up with credit on UPI? I'm saying, do you see any specific additional opportunity now opening up with credit cards on UPI on the merchant side?
On the merchant side, as in the introduction what I said, right, it has a lot of opportunities. First of all, it is giving an increase in the transactions, and to that extent we get more transactions, and based on that we are able to monetize, and we can do a lending to this to the merchant. From the opportunity point of view, BharatPe on the consumer side is also looking into it as a good opportunity. We launched our consumer app, right? And the main use case for our consumer app was the credit. And the credit, the benefit what we see to which the consumer get is first of all, everybody likes to make up any expenses what you are doing, you are paying over the time. Secondly, there is an emergency use case and you don't have a fund, and if you have a credit, it is always beneficial. Third, the most important thing what I see is with UPI, a lot of small value transactions are getting debited to your bank account, and that is actually cluttering your bank statement, right? And also second thing is when you are linking a bank account to that extent, there is possibly be a concern about that people are having an inertia that why to expose your bank account, right? With credit on UPI coming, card, you can set up a limit and all that stuff, and you can expose that limit on UPI, and all small value transactions, daily use transactions, you can park it from this account, right? And one single debit happens at the month end, whereby like a credit card statement, you make the payment, right? So only you see one entry in your bank. So that is a very good use case, and accordingly, the thing is we are launching credit card with co-branding with the Unity Bank, and similarly we are also working on credit line on UPI. All this credit product coming into the ecosystem is actually definitely will bring in a lot of opportunities, both for the merchant and as well as consumer. Because when we are opening this for the consumer, these are the additional transactions which will get pushed to the merchants. And to that extent, for merchant, it is beneficial. Also, what I see is there are a lot of bottom of the pyramid merchants are there, like small businesses, right, where they cannot afford POS machine, right? For them, UPI is a no-cost business, and they are now able to accept credit instrument by just placing a static QR code. So it is a very good opportunity whereby you can go and acquire large volume of merchants, and even now rural will have an exposure towards means opportunity where they can accept credit instrument.
Thanks. Rajat, fintechs can play the role of a TPAP or maybe a merchant acquirer, and both of these are in partnership with banks. What other opportunities do you think are available, given that credit card and UPI now opens up probably a lot more revenue streams as well?
That's a very good question, Deep. So the way we think about it is that a fintech or a tech-based player has certain strengths. One could be their ability to attract tech talent, hence build powerful technology. Two, they are agile in nature compared to some of the banks, I would say. And three, they are able to build distribution, be it on the consumer side, be it on the merchant side. If we look at the other side, on the bank side, their core strengths are one, their liability base and their cost of funds. And two, their capability on underwriting, the risk underwriting, which is the fundamental principles of credit. If we combine the two, there is essentially a very large play, which I think is manifesting in the way of TSPs. A lot of TSPs, a large number of fintechs, are becoming a TSP provider to the bank, where they bring their strengths and combine with the strengths of the bank to open up a large array of opportunities. I would say it's somewhere in the likes of JustPay, from M2P to MindGate. It could be UPI switches, it could be credit card stack, it could be other areas in the ecosystem that they're working very closely with the banks, and hence I think this is an area where we are spending a lot of time on, and we believe there's a lot to be done there.
Thanks. Sanjeev, you spoke about utilizing the UPI data for underwriting customers, and you have been underwriting customers using UPI data. Do you think there are any changes in systems, processes, maybe any specific, say, fraud systems, etc., which we need to consider in terms of changes now that credit cards is available on UPI?
Okay, so just a couple of aspects. One is, when you're doing UPI on credit card, where do these transactions hit? So let's say normal UPI debited to bank account hits Finacle. As in Finacle could be a different core banking system for somebody else, but we use Finacle, and by and large, many Indian banks are on Finacle. So that hits Finacle. On the other side, on credit card, I think all of us are on either Vision Plus or TSIS, Prime. Where it actually gets interesting for UPI on credit card is the transaction starts off on UPI switch, doesn't go down to Finacle, it actually hits Prime, and then it goes back. Now that is a very interesting walk, because then there are 2-3 implications I'll get to. But once you do it, it's pretty easy. So today, is it complex? No, it is not complex, but just let's say 2 years back when we started thinking, we said it can happen like this. So it comes from here, and this gate is only supposed to go down this path. This gate now has to switch to this. Once you do it, again, it becomes pretty easy. Just as UPI 10 years back would have sounded complex, it's now all of us are doing it. What it then leads to is, where does your fraud engine sit? Does it sit there? Does it sit in NPCI? Or does it sit in your core as in your card score? I think some of these decisions actually become interesting. Second part, how are you monitoring the risk at the merchant? Because let's keep in mind, in anything that you open up where unsecured risk is open, there is risk not only on the issuing side, the merchant could also be doing some stuff. The MDR is 0 for small merchant less than 2,000. Now, over there, in India, we know a lot of places we travel to, deeper parts of the country, etc. There is one board which says credit card with 2% lagega. But the other board is also credit card with paisa chahiye to 2% lagega. So you can actually withdraw your money from your credit card account, not going to an ATM, and have 2% no interest, because if you stay a transactor. Now that 2% board was sitting on, let's say, a 1.5% MDR, 50 paise ka margin tha. If the MDR is 0, conceptually the way to cash out becomes easier. So some of these risks get opened up. These risks are visible. It is a smaller risk today when the spend pool is 8,000 crore. If this 8,000 becomes 40,000, 40,000 becomes 80,000, the risk can multiply. Then the risk will move from acquiring side to issuing side, across obviously the same 4-party model that cards has. Now these are parts where as an industry we will need to be extremely careful. So everything in business and life is never romantic. There are these issues which sit with the opportunity. But again, if the opportunity is large, so will the risk be. You will have to take the business forward keeping in mind these things. But the simplest part of tech architecture, I don't think it's really complex. I spoke about that. I think some of these other things which are now emanating and which were thought of earlier. It is just that now the baby is born, the baby has to be disciplined as well. I think that's the part we are focusing on now.
Thanks. Rajat, there are a large number of startups which have now started focusing on credit on UPI as a larger theme. What do you think is the opportunity? You spoke about the TSP side of it earlier, but what do you think is the long-term opportunity these startups have? And how do you look at this as an investor?
Okay, so first of all, let me talk about how we think about startups or investing in companies, startups. I think there are 3 core principles that we look for. One is scalability, second is monetization and profitability, and third or most important one is the long-term sustainable competitive advantage. When we are thinking about credit on UPI, I think the first 2 principles broadly align as an industry, as a sector. There is a scale, and with MDRs on credit on UPI, the monetization and profitability is no more a concern, especially with credit on UPI. The third thing is where we start looking at each and individual player separately. When I think there are multitudes of players in this ecosystem right now on credit on UPI. What does each of these players bring to the system that they can stand 5 years down the line, 10 years down the line, and how will that eventually pan out? I think there are a number of factors again that we start thinking about it. If one, a lot of these players are somewhat playing on the edges of regulatory ecosystem. To a large extent, that has stopped now, but there are still a few, I would say, which sometimes become very difficult for us to look at. 2, then there are existing a large number of players out there, from PhonePe to Google Pay to WhatsApp, etc. How are you able to bring a differentiated play into the ecosystem that you are able to drive a winning partnership or winning formula there. I won't say that there is a standard answer to this question. It will all depend on the business model, it will depend on the company, but overall I feel that there is a very big opportunity there, and without naming them, there are definitely large number of players that we see are part of this growth, this tailwind, that would be very exciting businesses and something we would love to back.
Thank you. Sandeep, you've been a banker. You're now on the fintech side, and you've run payments parts of the businesses for a very long time. From your past experience, what do you think are some of the pitfalls which we as an ecosystem need to be wary of, need to be prepared, and probably have solutions for already?
I will answer this question from the point of view of how we can, what sort of the challenges which we are seeing on the merchant side, basically, right? Like the common thing, what I see is when we go and pitch a credit card on UPI to merchant, the common concern what comes is we come to know about the transaction post the transaction has happened. That is the common concerns which comes. Unlike in when you go and shop using a credit card, merchant know well in advance that the customer is going to pay using credit card, and to that extent, MDR will be applicable. And a lot of primarily we acquire small businesses, and their margin are very thin. Say for example, if a 10,000 rupees transaction is happening, and if 2% is the MDR, right, he has to pay 200 rupees as the fee. And if he has already offered that margin to the customer, and the customer is actually making payment on UPI, merchant is expecting zero charges, right? Because UPI is zero. But when he chooses a UPI credit card as a mode, he gets charged 200 rupees. So that is the primary concern. And to some extent, we are working with NPCI and trying to figure out how it can be handled. One way on the consumer side, they are trying to solve it by, on the PSP side, if the merchant is not accepting a credit card instrument, so they will not show that option. But actually that will not solve the problem. I think there the problem could be easily solved if that option, that MDR, if merchant is not willing to accept, then if consumer is okay to pay the additional surcharge, I think that would solve the problem. And if that comes to my, what I personally feel is, then you will really see the growth of UPI. Because if I am having a credit card on and linked to an UPI application, I probably will not select that as a mode because I know it will get declined. Right? So you don't have a guarantee that if you select credit card as a mode, the transaction will go through. Unless that guarantee will not come, then that acceptance level, customer will not get habituated to use that mode, while his intention is that, right? Like similarly when UPI came, QR was there, but unless everybody, all merchants were not having the QR code, customer has not changed their habit, right? In the same way, now also all the QR will start accepting credit card. That is the time when customer will also move to credit card.
All right, thank you. I think over the next 5-6 years, the story is expected to play out. I'd love for all of you to give a prediction on what sort of scale we can probably see, say by 2030. Mr. Modi said that he'll be here 5 years later, so would love to hear from all of you what we should probably promise him as the number which he can look up to.
I feel if I have to transact on UPI, I would have selected credit as the only mode, right? Because I don't want to clutter my bank statement. All my transaction typically would have moved through credit card. That's what I see. Typically, good percentage of P2M transaction, which is currently happening on UPI, at least 50% of that transaction should move to credit.
Sanjeev?
So, 3-4 things, obviously. Prime Minister will still be the same, but rest of it, we will need a larger venue for GFF. I think that's one. We were just running out of space a couple of days back. But just in terms of this, this area that we are talking about, I think 3-4 things I can clearly see happening. All of us now in a wallet have obviously our cards and we carry a mobile. It is quite likely in the next 2-3 years, many of us will stop carrying our wallet because mobile is good enough. And not just because mobile is good enough for UPI, it is also good enough for UPI on credit card. Now, will that number 6 years, 5 years later, let's put it 2030 is about 6 years away, yeah, okay. So 6 years away, I would think at least 30% of our issuing customers will stop carrying plastic cards with them. On the acquiring front, we obviously have lots of solutions, whether it is QR, NFC QR, so on and so forth, etc. I would assume that number, because keep in mind, any which way, right now, if you were to look at it, terminals are roughly around 70 lakhs to a crore or so, but we are talking about multiple of that in terms of QR. So I would think less than 30% of terminals, less than 30% of merchants will then be having terminal solutions. In a normal mainstream merchant I'm talking about. I'm not talking about small where anyway there is nothing apart from the QR. I think those are two big things. Third thing is by 2030 Indian economy will at least be $6 trillion, right? We are 3.4, 3.5 or thereabouts. Now and let's also assume what this comes down to is our GDP per capita is 2400. $2400 में से let's assume just for basic non-discretionary $1200 लगते हैं for a minute. I don't know, but let's assume it is $1200. So you have $1200 to spend on what we call discretionary, movie देखना है, so on and so forth, etc. When we become 6 trillion, we are really talking about the GDP per capita would have reached 4,200. We should assume the non-discretionary remains 1200. So suddenly $3000 है spend करने के लिए. So how much will the spend pool be? If right now we are talking about credit card being a 1.3 lakh crore, I'm again saying with the retail part of it, UPI being whatever, my sense is credit card spend pool, part of it just normal credit cards, part of it UPI on credit card, would be a spend pool which is at least 7 to 8 times of this number. So I would think a 1.3 would have by then become close to 8 to 10 lakh crore a month. Multiplied by 12 months, that's the spend pool that we are talking about 5-6 years from now. So yeah, I am 50 now, about to turn. I would be reaching, but many of the people here, there are some oldies I can see, but most of the population here seems to be young. If you believe today is not exciting, tomorrow is even more exciting.
Thank you.
So Deep, I would say my numbers would probably be very similar to what Sanjeev mentioned, but if I would have to think about prediction, like Sanjeev mentioned, there would be two parts of it. One is credit card spends today, roughly around $220 billion last year with the spends. I would say it will grow at 30-odd%, reaching around $1 trillion of spends by 2030. And my prediction would be around 40 to 50% would be that on RuPay on UPI. So around 400 to 500 billion coming from there. And then the P2M spends, which is there today, which is around 600 billion last year, that will probably grow at around 40-odd%, reaching to somewhere around 3 trillion. And maybe around, I would say another 40 to 50% coming from there, from RuPay on credit cards. So around 1.5 trillion coming from there, $0.5 trillion coming from credit cards. So somewhere between 1.5 to 2 trillion would be my estimate of where we will land up on RuPay spends.
Thank you so much. Looks like we're all extremely positive about this going 5 to 10 times at least. So let's hope that happens. Thank you so much for joining us. I think we can open it up to a few questions now, if anybody has any.
Yes, we do have a question here. Can we have a microphone? It'll be sent to you, sir. Please do introduce yourself and ask the question.
Hello. So hi, my name is Kashyap. My question is related to, we are talking about credit cards on UPI, right? So from a customer's perspective, every customer who has a credit card would like to do these spends through credit card only. But on merchant side, It's the small merchants up less than 2,000 who have zero MDR, others have higher MDR. So the customer right now is facing problems. Problem number one, the merchant has disabled, let's say, that. Second problem, you cannot pay because of that. So from customer side, customer is ready to do all expenses on credit card through UPI. But from supplier side, like from merchant side, there are problems. How are you going to tackle this with NPCI? Or what are the plans? Like how do you change that?
Yeah, this actually, I mentioned that we are working very closely with NPCI. There are merchants, if before initiating a transaction, if he comes to know that the customer is using a credit card, so he can adjust his price accordingly, right? But since he is not coming to know, that's the reason he is not accepting as a credit card as an instrument. So what probably solution would be that for those merchants who don't want to accept a credit card, right? So when the customer is actually scanning a QR code, and at that point in time, he will come to know that the merchant is not accepting credit as an instrument. And if the customer chooses to pay using credit card, at that time, he might be charged a surcharge. That is what we had proposed, that you introduce a surcharge and let customer decide that whether he want to go with it. Like currently also for rent payment, credit card payment, customer is willing to pay a surcharge, even for petrol payments, right? So that option, if it had been passed on to the consumer, then probably it will solve the problem. And that is what we are working with NPCI.
Thank you so very much.
There's another way to solve it, which is to charge for UPI. That option is also open. We should not assume that this is how it's going to continue forever.
Yeah, let's see.
All right, I think we need to close the session. Thank you all, and thank you so much for your amazing insights.